a lot of people don't plan for getting older and spending some time in a nursing home, at $10,000 a month. And they're like, well, my daughter said she'll take care of me. I said,
And welcome into the program. This is your game plan for retirement, hosted by Chris McIntire, brought to you by McIntire Retirement Services. Chris McIntire is Northwestern Ohio's resource for a common sense approach to planning, and McIntire Retirement Services, home of the game plan for retirement, mapping out your optimal path to confidence into and throughout retirement, winning the game of retirement, so to speak. That's the game plan for retirement. Chris, we always appreciate having you on the program. Thank you for being here again.
yeah, my pleasure there, Peter. It's funny. You and I do the show a lot of times on a day I get a haircut. So I run back from the barber shop and I'm wearing a hoodie. So forgive me for those of you watching on the podcast here. I actually do dress up from time to time.
Well, looking sharp, looking sharp. You got a good person there that does the hairdo, Chris, and you still got all yours. You and me both, a couple grays in there, but you got a full head there. So always a pleasure seeing you, regardless of the haircut or not, Chris, but are looking fresh today. And we are going to be talking about a guide that you have available. It is a 31-page guide, Retire Ready. And we've talked about this in previous editions of the program, but I think a lot of people are mentally ready to retire, but financially maybe not retirement ready. And that's what this guide is really aimed at, is helping people understand the financial implications of being able to enjoy retirement, the things that we must address with our money, our investments, and our retirement accounts, Chris.
Yes, absolutely. There's a lot of psychology transferring from, working, bringing money in, to not working, taking money out. That's part of our job, I think, is psychology and helping people understand this transition, and that, look, it's okay to start drawing some of this money out, and for me, and I know, Peter, what you do, we show them, look, here's the dividends and the interest that are flowing in. That's basically what you're taking out. You might have an annuity that gives you an income for the rest of your life. You have Social Security, you have pensions, and, just to try to coach them through that, and I would say the first 12 months, there's a lot of anxiety, and that could be 6 months before and 6 months after as well. Everybody's a little different. If you've got a comfortable pension, comfortable Social Security, little easier discussion. If you only have Social Security and you may not want to take it for a few years, you're really relying on investments. And as we started off here in 2025, I think it's safe to say, makes folks nervous when we see what happens with the market here, at least in the short-term side of things. And, you and I were talking at the beginning of the show here before you hit the record button. It's like, well, what's wrong with, putting tariffs on, Australian aluminum and Canadian aluminum when, they're at they tariff our materials at a strategic advantage to them, at a strategic disadvantage to us, and like, all right, we're encouraging American companies to make things here in America so that they hire American workers. So, for those of you that are out there saying, Donald Trump is only helping the big corporations, like, well, when they bring the factories back here, who do you think they're helping? Not the workers in Mexico that are doing it cheap. It's the American labor force is where we're going. And, you got to cut through the headlines and the political garbage. It's enough to drive somebody insane here.
But Chris, I mean, whoever was doing this, those jobs, those factories, those industries, those have been being exported and outsourced for decades now. It's not like this is going to be an overnight transition where all of that industry is brought back, and our supply chain. I know we heard a lot about that in COVID, but this goes back to that same issue. Just turns on seamlessly, and all of the factories, smokestacks start back up here in America, right? And it's not going to be an overnight fix. There is going to be some short-term pain and some growing pains in this process, regardless.
Sure, yeah, and I want to talk about this here a little bit. And my dad grew up in Mansfield, Ohio. They had United States Brass and huge steel companies and all of that. And that town is a ghost town now because all those factories are overseas now because strategic advantages that overseas did to us. China dumping cheap solar panels on here to bankrupt a company called First Solar, which is close by. They've been trying to do that, since its inception. So we have to back away from some of this and say, all right, download the Chat GPT app on your phone and put in there, what tariffs did Australia put on American goods prior to 2025? You'll be shocked at what you see. So, you got to cut through the headline crap that comes across your news feed, regardless if you're Republican or Democrat. You got to get down here into the facts and not the sound bites. And the other side of this is, good people are losing their jobs in the government sector, right? As they're going to downsize the size of the government. Good people lose their jobs in corporations all the time because those corporations have to remain profitable because they have a fiduciary responsibility to shareholders, so on and so forth, and competition. And, if we're spending $2 trillion more than what is coming in, at what point does the US dollar drop in value that inflation spikes? We're seeing that right now. That's what was happening at the end of the previous administration coming into the new administration. It's almost like a Ponzi scheme. You can't continue to borrow more money to pay the debt on old money. At some point, that collapses upon itself. So we're just seeing it right now. We're kind of being force-fed through a fire hose right now. And, take a deep breath. Some of these folks are some of the best minds in the business, and they just happen. I sent an email out to clients not all that long ago, and I said, I don't have any faith that the people that created the problem are the ones that have the strength and the will to fix the problem.
Yep.
So I'll leave that be that as it may. I'll step back here and let my blood pressure come back down.
My grandparents, my mom grew up in Wellsville, Ohio. Used to be a pottery and
Yep.
China and brick making town, and it cost less somehow to make those overseas and ship them here than it did here, and that's why the jobs are gone and the town's a ghost town. My brother works for what I would say is, not a conservatively minded tech company, and he shows up to work and, a random Friday and a whole floor of people is laid off. Like, these things happen in business, right? And I know that was part of the allure and attractiveness, but also what people apparently have not liked about actually looking at government and saying, hey, the way things are running is not as efficient as it could be or should be, and it is a waste of all of our dollars. So yeah, I mean, talking politics here as we get going, but the reason why, Chris, is we're going to cover this Retire Ready guide, and recently we've seen, as a result of these things, a lot of market volatility, which I think if people do not have a plan, the game plan for retirement put together, and have confidence that they are ready for retirement financially, that it can induce a lot of panic and worry and emotion and concern. And then unfortunately, as a result of that, knee-jerk reactions, which are often financial mistakes.
Yeah, absolutely. And one quick example, my mom was born in Perrysville, Ohio, where they make Mansfield pottery products, a lot of toilets and all of that. They've closed that plant and they're moving it to Mexico.
Yep.
That has just happened.
Again, we are talking with Chris McIntire, president, founder of McIntire Retirement Services. Ladies and gentlemen, you need a game plan for retirement so that when the news of the day, the headlines, the sensation drives the market in one direction or another, you know that your financial future is still stable and secure, and you are confident in your ability to maintain lifestyle into and throughout retirement while you intentionally no longer have a paycheck. That's what Retiring Ready is all about. That's what the game plan for retirement is all about. And if you would like to get your plan put together, pick up the phone, have an introductory conversation, call, strategy session with Chris McIntire and the team from McIntire Retirement Services. They would love to meet you. They would love to get together and make that happen. You can visit McIntire Retirement Services.com, McIntire retirementservices.com, or you can give them a call at 419-332-0532. That's 419-332-0532. So Chris, as people are striving, trying, and looking forward to a confident retirement, there are things financially that we need to address. And last week we were in the midst of covering the 6 critical risks. Number one, the risk of outliving your money, that number one fear that we hear about, the U.S. national debt. I think we've already talked a little bit about that this morning, but how that can impact and affect us personally, Social Security, Medicare, healthcare cost, inflation. These were all things that we talked about. And then we were on number 6, which is everything else. And we've certainly seen a lot of everything else the last few years, really, five or so years.
Yeah, we sure have. We saw a spike in inflation coming out of the COVID side of things with too much money chasing too few goods. We had, supply chain crises. We've been through a lot of the perfect storms here, since 2020. It's hard to believe that, we're celebrating that, not necessarily celebrating, but the fifth anniversary of the COVID pandemic, and all the lessons learned from that. Let's hope that if we have something along these lines in the future, that they learn from that. The education of the young kids here has taken a significant step backwards. My wife was telling me just yesterday, she said, I was reading a report, and I don't know where she read the report, so I can't cite the source, but said that in China, they don't allow their children to look at TikTok. They have a whole different way of putting information out there. It's all about learning. Here, it's about tearing people apart. And Americans have to wake up to that fact that we are self-destructing. But my wife said, the 7th grade kids here are 3rd graders in China from the education level. Think about that.
Well, I know that that is kind of the international geopolitical risks that we were talking about and alluding to. But market volatility, cybersecurity, data breaches, pandemics, underfunded pensions, underfunded retirement accounts, that's kind of all in the category of number 6, everything else, right, Chris? And
Yes.
we've certainly seen the inflation, Medicare, and Social Security are a risk, unplanned for and unaddressed healthcare expenses. And that's why we need a specific process for addressing these risks and for building reasonable, lasting, expected financial confidence into and through retirement. And you've got that process there at McIntire Retirement Services. That's what goes into designing the game plan for retirement, so people can live more, do more, not worry as much about the day-to-day of the market and the headlines and what the money or investments are doing, because we've got a plan that has taken care of that part of it so we can live our lives. Can you talk about that planning process, what that entails?
Yeah, absolutely, Peter. You kind of start with the big picture piece. What do you have? How much do you need? Where are you going to get it from? How long are you going to work? Who's paying for your health insurance if you retire before the age of 65 and transition into Medicare? And then we help build a plan. We can use, I've got a program called Social Security Pro, which helps determine filing strategies for Social Security so people can get a look at what they're going to get down the road, in a lumps, what do I get paid if I take Social Security at 62 until I'm 90 versus taking it 67 until I'm 90. We can look at those. We have a program, I call it Retire Up. I think it's called Invest Cloud now, as they've been bought by other companies. And, we can, input that data and then change it by rates of return, by inflation rates, by tax rates. In our office, we deal with a lot of husbands and wives and widows and, divorcees and single folks and whatnot. But, when we're dealing with, a husband and wife combination, the risk is one of them passes away early and we lose a pension benefit or a Social Security benefit. And I'll be fair here, as when we do that, when we deal with married couples in here, and we look at one of them predeceasing, as we always kill the guy first in the office, not the lady.
You have to apologize when you do that, Chris.
Yeah, I say, Charles Manson's in prison for what I do in this conference room here. At least I'm just doing it on paper.
Yeah, I apologize for having to do this in just our conversation here, but you're 85 and then you die, right?
Yep.
What happens? Like, I'm laughing about that, but
Sure.
in reality, like those are the kind of what ifs and really inevitabilities when you think about it, Chris, that a lot of people don't have addressed in a financial plan.
Yes, and often we look at people, we're talking about risk and retirement planning here a lot of people don't plan for getting older and spending some time in a nursing home,
Mm.
at $10,000 a month. And they're like, well, my daughter said she'll take care of me. Said 24 hours a day, 7 days a week. She's going to put her life on hold. What if she's working? A lot of those different factors. So you really have to drill down into it. That sounds good when you're 65 and healthy, but when you're 85 and need constant care to do everything, who's going to pay for that? It's a difficult, I say that with aging parents, and one in a nursing home right now, Robin's dad, as actually.
Yeah. Well, I know that you've seen retirement many, many, many times over. We as hopeful retirees have either never seen it or hope to only see it once. And that's where the benefit of perspective and experience come into play, ladies and gentlemen. But there is a process, and the result of that process is you've got a written plan, the game plan for retirement, taking inventory of your assets, your income needs in retirement, clearly identifying your retirement, financial, and life goals, creating and testing. And that's what Chris is talking about here, kind of being the pessimist in the conversation. Well, what happens if this goes wrong? What happens if that goes wrong? Stress testing the plan and then executing and continuing to monitor and adjust as necessary, because life is going to change and evolve. And that's how you get the game plan for retirement. It starts with a conversation. Give Chris McIntire Retirement Services a call, 419-332-0532, 419-332-0532. Chris, next in this Retire Ready guide, you've got some algebra for us. And in fact, actually last week or one of the recent weeks on the show, you said something about math, and I actually took note of it. Algebra is figuring out the unknown. Calculus is figuring out the unknown while things are in motion. And retirement is much more calculus than it is algebra. So calculus and calculating, same root word here, calculating your retirement has some math involved. And you've got some math equations in this guide that are going to help people kind of run through the rough numbers. And this is, again, a regular practice and part of the conversation in designing the game plan for retirement in your office. And don't worry, ladies and gentlemen, Chris is going to do the math for you and with you, right?
Yeah, we're going to keep the quadratic formula and the Pythagorean theorem, to speak some trigonometry in there. But it's funny. I had a
SOHCAHTOA. I remember SOHCAHTOA.
Yeah, I had a client. She taught math, and she was in the office here this week, and I gave her the quadratic formula, and she's like, "Now I'm impressed."
Yeah. But interest rates, spending and consumption, what you plan to spend, wealth, how much you have, the time, how long this needs to last for. These are all the variables, right, Chris? These are all the variables that go into that equation. And what we have to do is we have to at least have one or two things that are known numbers in order to figure out the rest, to tell you if you're in good shape, if things project out pretty well, or if we've still got some work and some progress to make, or I guess if we need to adjust some of the expectations we have.
Yeah, absolutely. And some of those are, these are some critical thinking type skills that we get into. And that's where algebra comes into play. Like you say, it's the order of operations. How do you critically solve a problem? And, you analyze what is the real problem? What are the possible solutions? Which is the best solution to implement? And then you adjust that over the course of time. And an example would be, well, if we hit another COVID, and the market's going to fall 30% in a month, what do you do? Well, now we have implemented buffer strategies, structured notes that offer some degree of protection on the downside to a measured number, basically. So a lot of things that evolve over time. We use the fixed index annuities or fixed annuities for safe dollars. We use money market accounts for safe dollars. We use growth stocks to combat inflation over the long haul. And a myriad of different financial instruments that we have at our ability. And unlike some of the other management platforms that are out there, we're open to using what's the best tool in the toolbox for this company's specific problem. Whether it pays a commission or it charges a fee is somewhat irrelevant. Does it solve the problem? And did you tell the client how you got compensated?
Yeah, indeed. And that clarity in the conversation with advisors, I think is another issue not addressed in the Retire Ready guide, but in the financial planning world, or actually in people having the plan that they feel confident in, that I know that you go a long way in trying to address there at McIntire Retirement Services, Chris, that part of the obscurity should never be an issue in your relationship with your money and your advisor. And I know Chris goes a long way in making sure that that is not the case, that you understand what your expectations should be, that you understand what your money is doing, that you understand the cost for each piece of that. So again, ladies and gentlemen, that's part of having a game plan for retirement, and by having that game plan for retirement, lasting confidence in your quality of life throughout retirement. Give Chris McIntire and McIntire Retirement Services a call, 419-332-0532, 419-332-0532. Now, Chris, you actually put some of these variables and some of this math into an example, which I think is a little scary and a little eye-opening. But you give the example of $1 million retirement, and then you say, hey, let's follow the aged 4% rule that Wall Street and the financial world has been using for almost a generation now for predicting how much income we can generate from our nest egg. So if we've got $1 million, 4% of that is the suggested kind of guideline. That's $40,000 a year of income that $1 million can generate for us. Oh, but wait, most people have that $1 million nest egg in a tax deferred account. So now what do we want to factor in for taxes? At 15% taxes on that $40,000 a year of income, Chris, that equates to $2,833 a month of spendable income for us in retirement off of $1 million, $2,833 a month of income. Now, that's not going to be the only piece of the picture, but that's actually, I looked at that and I was shocked at how low that really actually is.
Well, yeah, Peter, you're absolutely right. That is, you start factoring in income taxes in those IRA withdrawals, which is where most people have been putting their money to lower their taxable income and for savings in the 401k platform. Thankfully nowadays we're starting to see more money in Roth IRA accounts or 401k accounts, which can help alleviate some of that concern. But we got almost an entire baby boom generation. All of their money is in tax deferred, retirement accounts. And the more they take out, the higher the tax rates can be. And that can affect other things down the line. Social Security becoming taxable, paying more for Medicare premiums. So there are a couple of potholes that you can step through, or maybe sometimes you can step around depending on how you have your asset structure set up, and what you're going to do. Because, IRAs can be the most dangerous when you're making large lump sum withdrawals out of it. Put a down payment on a second home in a warmer climate, for example, buy a new car, many other factors. I know we always like to talk about, look, if you're going to make a big IRA withdrawal, do something pleasurable with it, but that's not always the case. Could be $10,000 a month to pay for the nursing home care of your beloved spouse.
Chris, I guess in good news in looking at this, you actually talk a lot about how to generate more efficient, more effective cash flow rates, doing more with less, generating higher income payouts from a nest egg, and have been doing this for quite some time in helping people really optimize the income production of a portfolio to also give them more available discretionary income to continue maximizing investments.
Yeah, absolutely. And, you want to, look, we've talked about dividend stocks here, those high yielding structured notes that we utilize that can be double digit yields, covered call strategies which are like option strategies to really boost that yield, to go from that 4% withdrawal rate to maybe 6.5% again, depending on someone's overall risk tolerance. Preferred stocks that pay 6-7% dividends, annuities that may have 6-7-8% payouts with increasing income potential as well. So a number of different instruments that are available. And again, when you're an investment advisor, you have to look across the entire landscape. You can't just look at Wall Street, because the Wall Street pays you a management fee. You have to look across the insurance industry. What do banks offer? What does Wall Street have to offer? Then you're acting in the best interest of clients, not coming at it with blinders because that's what your corporate flag says.
Well, again, we are talking with Chris McIntire, McIntire Retirement Services, home of your game plan for retirement, the written plan, the instructions on how the money needs to operate, what it needs to do, how it needs to be deployed and utilized in order to give you lifestyle and lasting lifestyle, quality of life confidence. If you would like to get your game plan for retirement, pick up the phone, give McIntire Retirement Services a call, 419-332-0532, 419-332-0532. Chris, talking about investing, we talked about generating the income, higher cash flow, more efficient payouts, how to do that and protect as much as possible. But then you have a section on investing. Your number one goal in investing in retirement, to maximize your retirement nest egg, protect investments above all else. And I know this kind of echoes a famous investor's two rules, right? Warren Buffett, rule number one, don't lose money. Rule number two, refer to rule number one. Why is this so important, critical for us to recognize and adjust to achieve in retirement?
Yeah, so the law of large losses comes into play. If you end up losing 30%, well, the market's got to come back 43% just to get back to break even. And when you and I talked previously to hitting the recording button, at clients that get nervous, and the market is where it was at 6 months ago, about the time that we're talking here today, and that's not that big of a deal. I mean, you were 6 months ago and you go the previous 12 months. Well, that's been a pretty solid run. Historically, the S&P 500 drops 15% at some point in any 12-month calendar time frame. So, people get so conditioned to, the market going up that, they don't think that, stocks can fall, bonds can fall, real estate can fall, and that's why building diversified portfolios, one to insulate the other from, catastrophic events going on.
Again, we have been talking with Chris McIntire. You've got this great guide, Chris. It is the Retire Ready guide for people who want to enter into or make it through retirement ready from a financial standpoint. And we've covered a good bit of it, but there's still more information here. It's 31 pages packed full of what you need to know, the issues that you need to address to have lasting lifestyle confidence in retirement. And what you really need, what it comes down to, is a written plan. You have to have a plan for your financial future. And that's what Chris McIntire puts together for each and every one of his clients, the game plan for retirement. To take advantage of that, to get that, no costs, no obligation, a plan for your financial future, call McIntire Retirement Services, 419-332-0532, 419-332-0532. Also, if you'd like this guide, Retire Ready, you can give a call, that same number, 419-332-0532. Chris can email you out a digital copy of this, no problem. You can get it on your own. But to apply the lessons, to apply the information to your situation is the real power. And that comes through having a specific, written, individualized plan, your game plan for retirement. Again, for the guide, or for your game plan for retirement, give McIntire Retirement Services a call, 419-332-0532. Chris, always a pleasure having you here on the program.
Hey, my pleasure, Peter. Thanks for listening, everybody, and may God bless America.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.